If you wish to have a profitable day ahead, you've tuned into the right show, Traders 20 on ET Now. I'm Kamya Verma.
Hi everyone, I'm Ava, and the Bashar, as Kamya pointed out, this is the show where we outline your top trading recommendations so that you can have a profitable trading day. We'll get on board our 6 technical experts over the next half hour, and they'll be identifying some of the most exciting bets in the markets.
Well, not just that, we'll also be showcasing commodity picks as well as strategies to make the best of futures and options market. So here's the lineup for today. Ashwani joins in from Delhi, MITESH Thakkar, Sandeep Wagle, Prakash Kaba, Shardul from Mumbai, and Deepak from Pune. Gentlemen, a very warm welcome to Traders 20.
Okay, a quick check as to how the markets are panning out at this point in time. And as we mentioned earlier, I think the story is largely for the broader markets where you're seeing the carnage. So not really affected for the broader markets. Remember, yesterday we decisively broke below the 5,800 level, but seeing no respite over there. Let's point out how the market breadth is doing. We're still in favor of the losing side. The Bank Nifty yesterday, which tumbled close to 200 points, is seeing a little bit of buying activity. But the market breadth is not looking very encouraging, and it's 57.65 on the index on last tick. Well, let's point out then how some of the top gainers are performing at this point in time. Core education, of course, your biggest loser from the mid-cap space. You've got that carnage really playing out for some of these individual counters, and if I'm not mistaken, core education has slipped something like 80% in the last 4 trading sessions itself, so absolutely abysmal for that one. Evron, ABG Shipyard, Welspun Corp, or Opto Circuits, really the list is relentless. But for the broader markets, for the benchmark indices, pardon me, Bharti Airtel, that continues to hold up very smartly. You've got L&T, Reliance Industries is at 836 as we speak, so good support to the index. Axis Bank as well as Cipla, Jaiprakash Associates, ICICI Bank, ITC and Unilever looking fairly strong on your screens. On the downside though, Ranbaxy is the biggest loser, currently clinging on to 400 as we speak. GAIL India, Tata Motors, Dr. Reddy's, Lupin and ONGC seeing a bit of a divergent move there from the oil and gas pack, down by 1.5%. Well, that's how the markets are looking at this juncture. Let's get you that disclaimer before we get started with Traders 20. Please do make sure to consult your financial advisor before taking on board any positions in the stocks recommended. Well, a day ahead of expiry, we're at 57.68. Good time is any to bring on board Ashwani Gujral and MITESH Thakkar to walk us through their top trading ideas. Ashwani, what's your call on the index at these levels, and what would you be recommending in terms of individual stocks today?
Well, the downtrend continues. It's a mild kind of a pullback. I don't think there's anything significant happening on the market today. Maybe we could, close 10 points higher or 10 points lower, but the odds are that we will be flat around these levels till we hear from the FM now. So the ideas mainly are on the short side, because that is where the weakness is coming into more and more stocks. So DV's Lab is a sell with a stop of 1020, target of 965. Tech stocks are now facing some profit booking, so I think it's time to sell into them as well. So HCL Tech is a sell with a stop of 720, target of 695. And GAIL is a sell with a stop of 336, target of 318. And JPOCH is a buy with a stop of 66, target of 78.
All right, 3 sell and 1 buy call coming in from Ashwani. Mitesh, would like to know your thoughts on the Nifty and also your top ideas for today.
So I think on the Nifty, I would agree with Ashwani. It looks like a very weakish bounce back, but what is important is that the markets kind of have, for the time being at least, held on to support levels of around 5750. So with budget, in case something positive comes about, I think there could be a bounce back which could be stronger tomorrow, and I think it looks like that the market might find a temporary bottom, and I'm saying temporary because I do expect it to be broken eventually around levels of 5750, and we might be in for some kind of a bounce back in the next couple of days. Though the initial strength clearly suggests that I think that the individual stocks might keep on falling despite the fact that the markets are showing some kind of bounce back. We are also looking at the breadth, which is negative by about 2 to 3 kind of ratio, despite the fact that markets are positive. So I got a mix of buy and sell calls, and And the first call is a sell on Asian Paints, where we have seen some important moving averages record negative crossovers. I would suggest selling this with a stop at about 4425 in the spot segment and look for targets of around 40 to 50. Buy on Bharti with a stop at 315 or just below it, in fact, and look for target of around 332. We have seen some strong intraday buy signals over here. Dabur remains on the selling side with a stop at 130.75, can be sold for a price target of 123.5, where we have seen some short-term breakdown happening on the charts. While Tech Mahindra, which is again, is a stock which has given a strong buy signals on the intraday charts, can be bought with a stop at 1024 for a target of 1080.
So buy and sell calls coming in from Mitesh Thakkar. I'm sure you've got lots of questions and queries. Well, here's where we're getting all of them answered with Ashwani Gujral. Our first query for the day comes in on India Cements. We've got Sumit Kalra, who joins in on the phone line from Punjab with his query on the same. Hi there. Thanks very much, Sumit, for being with us on the show. What's your query?
Hello, ma'am. Good morning.
Good morning.
Ma'am, actually I have got 300 stocks of India Cements at 88.5, and I would like to know whether I will hold it or sell it. May I, and my time frame is 3 to 6 months.
Well, as you may have seen that even in the entire cement rally, India Cements didn't really do very well, and it's probably not the best cement stock, and being in the mid-cap space has its own problems. If you want to remain in cement, I think better stock is probably Ambuja Cement right now, and this stock remains quite range bound between say 75 and 105, and maybe you'll do better keeping money in the bank in this sort of a stock. But I think Ambuja, which has corrected quite a bit from 220 odd levels, there I think the upside could be greater. Out there you can buy with a stop about 185, and maybe over time look for levels of about 245 to 50 whenever there is an economic rebound. But India Cements has disappointed over the last many years.
Alright, Sumit, hope your query is answered on that one. You can look at investing into Ambuja Cement and expect better returns there. However, India Cement is expected to be range bound. Our second query comes in on Praj Industries, and we have Samantha Sharma on the line with us, joining us from Pune. Good morning, Samantha. Lovely to have you with us on the show. Please go ahead with your query.
Thanks. I have Praj Industries at 48. I've got 500 of them. So I'm ready to hold on for a year. So wanted to check if, what kind of upside I can expect from this stock going forward.
Well, the market is still up about 20%, and as you can see, this stock is almost at 52-week lows, if not more. So clearly it has underperformed. If you have to stay for 1 year in any kind of stock, at least the stock should be performing, and even other people should be interested in that. So I would much rather look at private sector banks which are now correcting. You are probably aware of HDFC Bank, Axis Bank. Out there in a 1 year type of horizon, you will get much better returns than a Praj Industry. As you've seen, what happens with these mid-cap companies, most of them are 90 to 100% leverage, as in pledged shares. So why you want to take that kind of risk? Because money made is money, whether in a large cap or a small cap. And so far, given the state of the sugar industry where this company supplies, even that's not very good. So chances are that keep a stop about 40, and I don't see it going beyond 52, 54, and I think you have better use of your money.
Okay, limited upside for Praj Industries. Better to put your money in some of the large cap names. So hope we got your query answered. Our last and final query for the day comes in via email on MRF from Rajiv Sharma in Sikandrabad. Well, Rajiv says that he's bought 10 shares of MRF at a price point of 7,000 rupees and now wants to know if he should hold or sell. Hasn't really specified his time horizon, Ashwani.
Well, even if it's 10 shares, it's in the right share. So, taking from the last question, even 10 shares of a good stock, helps you out. Whether it's a high price stock or a low price stock, people get taken in by a $40 stock. But the whole point is it's at $40 for a reason. So, he can easily keep a trailing stop here now about 11,300, and he can at least look for a retest of 13,800, 14,000. Now the difference between this stock and the previous two stocks is that this one is at a 52-week high. Stocks which make 52-week highs make many more highs before they top out. And as we've seen, things at 52-week lows keep making further lows. So this should be one of the criteria that people look at when they start investing.
All right, thanks Ashwani for that. Rajiv, Ashwani recommends that you hold the stock with the stop of 11,300 and you could look at levels for 13,800 to 14,000. Well, here's a disclaimer once again from our end. Do consult your financial advisor before taking any positions in the stocks. Well, the benchmarks doing pretty well for themselves at this point of time. However, the mid-cap index very flat but with a positive bias. Education stocks, of course, are in focus at this point of time. Core education, that stock is slumping to its lowest since April 2009. The stock is down by about 82% in the last 6 sessions. Also, Educom, that one is striking lowest level since August 2006, dropping for the 10th day in a row. Everon as well, hitting record lifetime low at this point of time.
Okay, so absolute mayhem across individual stocks, particularly in the education space. Let's get in Sandeep Wagle and Prakash Gaba to outline their top trading recommendations. Sandeep, it looks like you're playing it safe, sticking with the large caps.
Well, yes, and I would also want to go short because at every higher level the markets are not sustaining and we are witnessing sell-off. Though the markets are choppy, I would agree, and you can play the markets on both sides. I would go with a sell in Tata Motors, which has given a clear breakdown of multiple supports in the daily charts. A sell with a stop loss of 286, target of 272. The second call is a sell in IDFC, a very clear lower top, lower bottom formation and a breakdown of multiple supports again in the daily charts. Can be sold on every little bit of a bounce back with a stop loss of 155, target of 135. And the third one is a sell in JAIN irrigation, a breakdown of prior swing low as well as multiple supports in the weekly charts. This move could take a little more than a few days, it could take a few weeks, but I see a target of 48 coming and I would go short with a stop loss of 61.
All right, all 3 sell calls coming in from Sandeep Wagle. Mr. Gaba, what about you? Your top picks for today and the reason behind selecting them?
Yeah, I like to go for 2 longs and 1 short. I expect some kind of a bounce back being an FNO expiry. If not a bounce back, at least the down move should stop here, should stall here. 2 stocks that I like for a long are, one is Tech Mahindra, has seen a good up move, seen a breakout and has sustained the breakout. So I expect that Tech Mahindra can go up from here as long as 1030, 28 holds. And on the upside, we could see perhaps targets closer to 2075. It's a safe long. Second is the State Bank of India. It's a very aggressive trade. It's at a place where it's make or break levels. If it has to go up, it can go from here. And if it loses from here, you hardly lose anything. So that's a very aggressive trade. Stop below 2197 or so. On the upside, target closer to 2280. So State Bank of India is a very aggressive buy and a very safe buy because you're going to lose very little. Risk-reward ratio in your favor. Third is the Jubilant for the shorting candidate. Seen a breakdown. Any up move that we have seen is more of an exhaustion up move. So I would like to say that maybe it can see lower levels, Jubilant for to levels closer to around 1000 or so. Have a stop about the levels of 1080 and play the short side on Jubilant foot. So 2 longs, 1 short.
3 longs and 1 shorting candidate. That is what Prakash is advocating. All right, let's get in a check as to what's happening with the broader markets. It's 57.69 on the index, so we're flattening out. But it's, pretty flat for the broader markets as well with a bit of a negative bias, splitting between the positive and negative territory, but now close to the lowest point of the day. You've got a lot of carnage being seen, so serious damage for individual stocks. Pletico Pharma, that one's down 20%, so currently at 265. Apart from that, you've got a Rushil Decor, that counter too is down 20%. Gravita India, in fact, it was the biggest loser on the BSE 500, so open with a big gap down, so it's lower circuit for that one as well. You've got a Titagarh Wagon, so you have the damage which is continuing for these select rail counters as well. Apart from that, Anjanya Life Care, massive volume action on that one. You've got a Flexi Tough, that counter is off by close to 8%, and we spoke about how the education stocks are seeing relentless selling pressure, so Everon too features on the list.
Well, time then to get you some more stock-specific ideas, and for that, let's bring on board Shardul Kulkarni as well as Deepak Mohoni with their top bets. Good morning, Shardul. Would first like to know your top ideas for today.
Hi, good morning. Well, I have 2 buy calls and 1 sell call, considering the fact that we're expecting the Nifty to either, move sideways over the next 1 or 2 trading sessions just before the budget. So I think that, you can look at buying Hindustan Unilever in the range of 455 to 457. The stop loss would be at 449, and the upside target which we're looking at is 467. So that would be the first buy call. The second one would be Tech Mahindra, in which we are seeing a good strong higher top, higher bottom cycle. And I think going forward, stock stock can move to 1100 rupees. So I would look at buying Tech Mahindra with a stop loss of 1029, and in the range of 1043 to 1047 one can look at actually entering into the counter. I think 1100 is possible. And the third one would be a sell call in case of Sun TV. The stock is ideally should be sold below the levels of 423. Already the stock has gone below 423, so I think that you can sell the February futures contract near 423. The stop loss for the trade would be at 429.5, and the potential target is at 405.
Okay, 2 buys and a solitary sell for Shardul, and it looks like great minds think alike, Deepak, because Tech Mahindra is your first buying candidate. What's so special on the charts?
It's been in a very persistent uptrend all the way back from middle of December, and every time there's been a bit of a correction, it starts all up again, and that's where we are today. It's up to a 5-day high after a correction. So good entry point. It's a buy with a stop loss of 1030 and a target of 1086. DLF is the second buy, stop loss of 269, target of 283. Despite some of the real estate stocks taking a battering, this has been in a pretty strong uptrend now for some time. In fact, in the last 3 months, it's probably outperformed most of the other index stocks. So this is a buy because it's just resuming its climb today after a bit of a decline. Stop loss once again 269, target 283. Last of the buy is ITC, very much a defensive counter. It tends to go up when the market is weak. It's doing that again. This is a buy with a stop loss of 290, target of 306.
All right, those are some of the recommendations coming in from Deepak Mohoni. Well, let's now get in a check on the commodities pack as well. And for that, let's go across to our commodities editor, Manisha Gupta. Good morning, Manisha.
Morning, Kamya, and thank you for that. It looks like a good market today. The rupee has gained 0.5%, and same is the case with commodities as well. A second straight day of gains coming in for them. Take a look at the gold prices. That one is trading at a 1-week highs, even as there is a bearish report that is out from Goldman Sachs, and you have seen net long positions continue to decline. The ETF holdings also have seen a redemption, but then there are positive cues as well. Bernanke has talked about the possibility of QE3 continuing. Also, you have seen central banks in Russia and Kazakhstan increase their gold reserves for a 4th straight month, and that is supporting the prices. So from nearly 1554 in the previous week, 1610 is how that one is holding in the Asian markets right now. It has been good going for the base metal prices as well. Positive home sales numbers from US and also the Bernanke strong testimony is something that has been supportive for this sector as well. The best gains that you have seen in last 2 weeks is how the base metal prices are trading at this point in time. The crude prices also are trading off their 8-week lows. Of course, the Bernanke assurance is one thing that has held this space as well. Italy is something that the markets, of course, are keeping an eye on, and the US inventories are putting some pressure that's continued in this space even at this point in time. But how do you trade all of those commodities? For that, let's get in Hitesh Jain from IIFL, and he joins us live on the show. Hitesh, hi, welcome. Let's start with the base metal space, then some bit of a buying coming into that one. Would you get onto the buy side as well?
Yeah, we prefer to buy because, see, although there are no encouraging signs from the Chinese domestic demand, but the Bernanke's recent remarks where they defended the bond buying program and they have downplayed the expectations of change in the bond buying, I think should provide a lot of support to the complex. So today we prefer to buy lead Feb contract around 124.5 with a target of 126 and a stop loss of 123.5.
Also, Hitesh, how would you look at the energy sector? Because crude prices really haven't given much of a confidence, but a bit of an uptick, how would you want to play that?
But we see a lot of deterioration in the crude oil charts because it is primarily weighed down by the reports of Iran and the Western powers making some progress, where Iran is actually thinking of halting some of the nuclear activities in response to the Western power proposal for lifting of some financial sanctions. So I think it would weigh on the prices. And as a result, we have seen also softening of Brent oil prices. So I think we would move a tad lower on the energy front, and we would prefer to sell crude oil prices on the higher side. So for today, we would prefer to sell crude oil March contract at a little bit on the higher side, that is 5030 with a target of 4970 and a stop loss of 5070.
All right, Hitesh, I appreciate you joining us. So that's the call coming in from IIFL. Buying into lead but selling into crude is how they would want to play up their commodities today. With that, it's back to you, Awan.
Thanks very much, Manisha. So clearly the commodities basket is monitoring all of the international developments. There's that quick disclaimer once again. Please do consult your financial advisor if you choose to take positions in any of the stocks recommended. Thanks very much to all of our 6 technical titans for joining in on the show and giving us your top trading ideas.